Joining me now from Miami, Florida is Andrew Carrillo, CEO and President at Barnett Capital Advisors. Welcome to the show.
Thank you. Thank you for having me.
All right, so we saw green arrows to start the day, but the S&P is in a correction, and the slide has been really quick. I mean, it took just 16 sessions. What's your reaction?
Yeah, I think it's it's the first major correction we've had in a couple of years. Investors need to keep perspective. We've had two back-to-back double-digit years, and when you look at the 3 and 5 year chart, the uptrend is definitely still intact. Whenever it gets sold that quick, it's usually ready for a bounce back, and I think we're going to be bouncing back here in the next few months.
Yeah, I know we talk about the history of corrections, and there's the stock almanac and all that, but I mean, we haven't had this level of tariffs in the mix. Can you speak to that a little bit, and how, I know we have historical data about corrections and how the market performs, but I mean, we really haven't had this kind of tariff activity in our economy.
Yeah, that's true. But at the same time, I think a lot of it is overblown. As long as a lot of it has been due to the AI move. There's a huge move in AI. A lot of that's corrected, and investors need to make sure they're in profitable businesses, they're diversified, and they're investing within their risk tolerance. And I think as long as you create an all-weather strategy, between growth and value, you're going to be able to navigate whatever tariffs come, in the markets.
All right, so let's dig a little deeper then. You talk about growth and value. Give me more details about what investors should be doing in the markets now.
Yeah, it depends. I think if you're 100% equity, you definitely, got to have your growth exposure, technology. But I think people need to not get, I think AI is for real. But at the same time, look at the profits. Look, are these companies really generating cash flow? And don't be overweight just story names. Over the last 10 years, there's been a lot of stories, right? There's the marijuana stocks 10 years ago. They all went worthless. They're all down 90%. Then there was innovative tech bubble with Cathie Wood and all of that. That lost a lot of money. And now there's AI. Now there's always some reality in the story. But people need to be selective in those names and make sure they're in companies that are really, really going to benefit from this, from the AI.
Yeah. Finish your thought.
No. And as far as value, just being in more conservative companies, not maybe linked to technology or something, but just profitable, paying dividends and increasing their dividends.
Yeah, what are some ways that retirees should be facing sort of this market action right now, and they can improve their current portfolios and their retirement strategies?
Yeah, I think one of the biggest things with retiree portfolios has been the low performance of fixed income over the last 25 years, and especially in the last 3 to 5 years. Fixed income is causing a lot of drag in portfolios. So one of the things I've been doing is creating an all-weather strategy. I've been replacing fixed income with physical gold for years and years, and that's been a big winner. Gold has averaged over 12%, and bonds have almost done the opposite. But at the same time, looking at alternative sources of income, such as private credit, things of that nature, because you want a conservative asset, but at the same time, you want it to be productive, and you want the performance to stand on its own 2 feet, not just reduce volatility, but cause a drag in the portfolio. So I think that's the number one mistake that I see in most retirement portfolios, is the stocks are doing all the performance, but the defensive side isn't doing anything, and it's actually subtracting from performance.
Why are you going for physical gold and not say an index fund?
Well, as far as gold, there's different ways. You can buy the GLD, you can buy a trust on the Sprott Gold Trust. I like that. But I'm talking about, I don't compare gold to stocks like an index fund, like an S&P 500, but I think it's the way it should be looked at as more of a conservative asset. And it's a lot more productive in a portfolio than bonds if you need it to be, right? By that, if there's a crisis, if there's inflation, and typically these type of cycles, they end with very high inflation. And I think there's more awareness about inflation than there was 3 to 5 years ago. So you're seeing the awareness, you're seeing people, talk about the dollar and Bitcoin and things of that nature. So those are all symptoms of a loss of confidence, and I think that'll continue. So I still think gold is important as a defensive asset.
All right, looking to next week, the Fed is meeting. What are your expectations, and do you agree with what you think the Fed is going to do?
Yeah, I don't try to predict Fed to Fed, weekly meetings, but I think overall they're going to be lowering rates. people forget, the last 20 years, the Fed is a low rate junkie. They love lowering rates, right? But they've gotten, finally they were a little way behind the curve, and they finally raised rates. And when I tell people that, they're almost like shocked. You really think the Fed's going to lower rates? Wow. If you look at their history, they love low rates, and I think rates are going to go lower, over the next year.
Okay, Andrew Carrillo, CEO and President at Barnett Capital Advisors. Thanks so much for your analysis.
Thank you.